7.
Tama. Unapiga. Unapiga. Cyangwa ni wo mwana ubarimo. Ni wo mwana ubarimo.
Okay, so welcome to today's class. Even though yesterday I said we'll start with intangible assets, I decided to start with this IFRS 15 because it's quite wide, and so that at least we complete it, because intangible, it's more of theoretical. So intangible is something that even if we didn't have time, we can read on it. But let us exhaust the ones with calculations so that and that leaves us with the last major standard is IFRS 15. The remaining ones are very, very minor. So IFRS 15, and remember yesterday when I was leaving the class, I said that IFRS 15, it's a combination of two old standards. Previously, there was a standard called IS 18. IS 18 used to talk of revenue. Actually, IS 18 used to be the shortest standard. And then there was IAS 11. IAS 11 used to talk of construction contracts. So IAS 11 was combined with IAS 18 to give us a new standard, which is called IFRS 15. So what is IFRS 15? IFRS 15 talks of revenue from contracts with customers. Revenue from contracts with customers. Revenue from contracts with customers. Now, of course, it is obvious that we need to break down, we need to look at IAS 18, but I'll not look at it in form of IAS 18. I'll look at it in the context of IFRS 15. So we'll look at what is revenue and what are contracts. So please note that this standard, it applies to contracts which take more than 1 year. For example, you are constructing a house for a client. Construction of a house, if it will take more than 1 year, 1 calendar year, it qualifies to be under IFRS 15. Maybe you are doing some tender, you've won some tender to construct some road for the government. In that case, in this case, it also qualifies to be under IFRS 15. So what is IFRS 15? Revenue from contracts with customers, whoever the customer is. So long as you have a contract with a customer and there is some revenue that you get into this contract, from this contract, and this contract lasts for a period maybe more than 1 year, in that case, it qualifies to be under IFRS 15. So let's start by maybe revenue. So let's start maybe by looking at definition of terms, definition of some few terms, so that just few more terms you will get. I'm just choosing the major ones. Other terms you will get in your notes. So number 1 is revenue. Revenue. So when we talk of revenue, remember we said revenue was from chapter 1, conceptual framework. Revenue is income from the ordinary activities of the business. So when we talk of revenue, basically it is income from the ordinary activities of the business. So remember, we had defined income. So you should know what income is from the previous chapters. From chapter 1, we had defined what income is. So I don't need to redefine income. So what is revenue? Revenue is income from the ordinary activities of the business. Now, we have what is called, before we move even further, classification of revenue. That is according to now IFRS 5. According to IFRS 15, not 5, I mean 15. IFRS 5 is non-current assets held for sale and discontinued operations. So how do we classify this revenue? Revenue is classified into 3 groups. So the classification number 1, or A, of revenue, there is what is revenue from sale of goods. Sale of goods. This is not normally a problem. Sale of goods, you can identify that we earned 1 million from sale of goods. Number 2, there can be rendering of services. Revenue from rendering of services. Most IFRS 15 questions test on the first 2. But there can also be the 3rd type of revenue, which is called other classes of revenue. Others, e.g., interests. You can receive interests if your business was to loan money. You'll be receiving interests. You can receive dividends if your only business is to trade in shares. Maybe your only job is to buy and sell shares. You'll be receiving dividends and royalties. These are revenues that you earn from intangible assets. Maybe you have a copyright somewhere. So if you have a copyright, you'll be receiving what? Royalties. Revenues from intangible assets. Now, class rep, gain from disposal, that is not revenue. That is a gain. Remember, we have 2 types of income. We have what is called revenue, and there is what we call gain. So class rep, you are not talking of revenue. You are talking of gain. Gain is not revenue. I hope we are together. If you've understood, you can type yes as we continue. Now we are saying revenue, remember, is a type of income. There are 2 types of income. There is revenue and there is a gain. Anything known as a gain, that is not revenue. Although it is income, but it is not revenue. Revenue is income from the ordinary activities of the business. What your main activity is. So if you dispose non-current assets, that is not your ordinary activity. That is just a one-off disposal. You don't dispose non-current assets every day. You don't dispose every month. It's only a one-off activity. That is not revenue. I hope we are together. Let's move on. So we are saying there are 3 classes of revenue. Now, what is really the objective of looking at this revenue? Why revenue? So in this case, sometimes think of, you have sold a product to somebody. Maybe you have sold a product to Andrew. I'm just giving an example. So when you are selling the product, maybe you have sold a laptop to Andrew. In this sale of laptop to Andrew paid you maybe 500,000 for the laptop. But on top of the laptop, there is some service attached to it. You'll be maintaining the laptop maybe for the next 3 years. Or let's talk of, you have constructed a road for the government. There is the amount you have spent to construct the road. But you also get into a contract with the government that apart from this construction of the road, I will also be maintaining the road for the next 5 years. So construction of the road, that is sale of goods. There is a good that is sold. Rendering of service is the maintenance over the next what? 3 years. So in IFRS 15, the examiner is interested to know how you account for sale of goods and how you account for rendering of services. How you account for rendering of services. Let us, sorry for that. Let us continue and define another term. Thank you. I think, yes, royalties, yes. When you get revenues from those intangible assets, those are royalties. I think somebody has already explained. Thanks for the person who has explained that to the other person who had asked. Okay, so let's continue. So we have looked at 3 classes of revenue. I will come back to revenue with an example. So let's go to the second definition. I want us also to define what is a contract, because what is the standard? The standard is revenue from contracts with customers. So what is a contract? You all know that contract is an agreement, Contract is an agreement between 2 parties, between 2 or what? More what? Parties. Contract between 2 or more parties, where one party undertakes to deliver an item, where one party undertakes to deliver. These people chatting in the group, we are in class, please don't chat in the group. Where one party undertakes to deliver, an item, and the other party to pay for the delivery, and the other party to pay for the delivery of the item, and the other party to pay for the delivery of the item. So what is a contract? A contract is basically an agreement where one party delivers an item, gives an item to you, and the other party, what does the other party do? The other party pays for the delivery of the item. So let's continue. So that is number. So I believe everyone understands what a contract is. Now, maybe number 3. So that is number 2. Number 3. Number 3. Number 3, contract revenue. You are seeing the flow. I started with defining what revenue is. Now I'm looking at what is a contract revenue. So when we talk about contract revenue, it's an amount specified in the contract subject to variation in contract work. Amount specified in the contract, amount that you specify in the contract that you will pay, amount specified in the contract, but subject to variations in contract work, subject to variations in contract work, incentive payments and any other claims. Incentive payments and any other claims. What are incentive payments? Maybe you get into an agreement with the government, maybe it's your customer, it's your client. You get into an agreement that for me to construct this road, government will pay me 10 billion. Now, apart from this 10 billion, maybe there is a clause in the contract that maybe if this road is constructed to a particular standard, you'll be rewarded. You'll be given an extra reward. That is an incentive payment. Maybe any other claims. Maybe you have started constructing the road, and then you realize that in the process of construction of the road, there are people who have taken you to court that you need to compensate them, that the road is passing through their land. So there are claims. Or maybe in the process of construction of the road, you have broken a pipe of water. So you must do that repairing of the pipe, and then you'll bill the government because you didn't know there was a pipe in that road that you are constructing. So that extra amount that you are billing the government is called a claim. The reward that the government gives you for the job well done is called an incentive payment. The principal amount that you agree in is what is called the real contract revenue. The exact contract revenue is the principal amount which is affected by incentive payments and is also affected by other claims. Variations in contracts. Subject to variations. It is subject to these, which means if you agree that the contract is 10, I'm answering the person who has asked the question. If you agree that the contract price is 10 billion, these 10 billion may change. That is what we call subject to variations in contract work. May change if there is some incentives to be paid. Number two, if there are any additional claims which were not planned in the original contract. Contract revenue is sum of what you say above. Yes. It's when you combine all these, it's what is called contract revenue. I hope we are together in that. So that is contract revenue. Number 4, I will come back to that again. Contract costs. You know, for every revenue that you receive, there is a cost that you will incur. So what is contract costs? So this comprises of, includes contract costs. Contract costs include the following. Contract costs include the following. Contract costs include the following. Number 1, costs related directly to the specific contract. Costs directly related to the specific contract. Costs directly related to the specific contract. Number 2, now what we were talking of before. If there are any variations, so costs that are attributable to contract activity in general. Costs attributable, how do you write attributable? Attributable to contract activity in general. Costs attributed to the contract activity in general. For example, e.g., you may pay some insurance. You must insure the project. Insurance. So insurance is not part of cost directly related to the specific contract. Maybe if there was, maybe I'll think of other examples as we continue. So, and any other costs related to the contract, any other costs directly, or how can we say this? Directly related to the contract. For e.g. administration costs. The people administering the project, e.g. administration costs. Those are costs directly related to the contract. Costs directly related to the contract. Is it same as contract amount? Yes. But because you've now learned the standard, because of what you have learned, don't now talk of, now as an expert in standards, don't talk of contract amount. You talk of contract revenue. You talk of contract revenue. Okay, so why don't we now move a step further? I hope you, maybe what I've not defined before I forget, sorry, what I've maybe not defined is number, is it 5? Claim. So remember I said, what is a claim? It's the amount that the contractor seeks to reclaim from the customer. Amount that the contractor seeks to reclaim, but it is always not good to use the same word, or to get back, to reclaim as reimbursement. You know, those people who operate cash, is it called reimbursement? As reimbursement, as reimbursement for costs not included in the contract, for costs that were not initially included in the contract. So I think I've explained most of the terms here. So I'll come back to all these. Lauren, just hold your peace, hold your peace, hold your peace. Okay, we'll reach there slowly. So let's just continue slowly. So how do we accounting for contract revenue? I want to first of all start looking at accounting for what? Accounting for revenue. Accounting for revenue. Accounting for revenue. Or I can talk of recognition of revenue. Recognition of revenue. Accounting, or I'll talk of recognition of revenue. Lauren, I've not ignored your question. I will just answer you with time before we complete the class. So accounting for revenue or recognition of revenue. There are 5 steps involved. This is generally new to the standard. It was not in the previous standard. So there are 5 steps. There are 5 steps involved. Please take note of these. Involved in recognition of revenue. Revenue. Please take note of these steps. This is not in the notes. It is not in the notes. So take note of this. Or you can add it. If you have the notes, you can add it somewhere. But of course, you will get the slides. So there are 5 steps involved in recognition of revenue. So step 1, identify the contract. Step 1 is to identify the contract. Identify the contract. So how do you know that? You determine whether there is a contract. You determine whether there is a contract in the example you have been given by the examiner. How do you know that there is a contract? If there is an agreement between 2 or more people. If there is an agreement between 2 or more people, you will see that as we continue. So identify if there is a contract. So how will you conclude there is a contract? If there is an evidence of an agreement between 2 people where one party undertakes to deliver an item and the other party undertakes to what? To pay for the delivery of the item. Step 2, identify the separate performance obligation. Identify the separate performance obligations within the contract. Now you must read the contract carefully to identify what does the contract say I'll be doing as the contractor. What will be my main job? Will I just be constructing the road, or will I also be maintaining? So that you separate the two revenues. There will be a revenue on construction and there will be a revenue on maintenance, which will not be recognized immediately. It will be recognized over the period of the contract. What do we mean by that? If the government gets into an agreement with you that will pay you 10 billion, out of this 10 billion, you have identified that 8 billion is for construction and 2 billion is for maintenance of the road over the next 3 years. The point we are trying to make is the 8 billion will be recognized immediately, but the additional 2 billion will be recognized over the 3-year maintenance period. Over the 3-year maintenance period, we will see an example. Step 3. So step 3, determine the transaction price. Determine the transaction price, the 10 billion that now we are talking of. Determine the transaction price. What is the price involved in this case? What is the amount we are debating on? What is the total, the 10 billion that I was talking of? Step 4. Step 4 is to allocate the transaction price. Allocate the transaction price. Please note that this one is not in your notes, so take note of it. Allocate the transaction price to the performance obligations. To the performance obligations. To the performance obligations. What do we mean by that? Out of the 10 billion, what goes to the construction and what goes to the maintenance? That is the allocation. What goes to construction and what goes to maintenance? Remember, what is step 2? Identify the separate performance obligations. So in step 2, you identify that in this contract, obligation number 1 is construction of the road. Obligation number 2 is maintenance of the road. In step 3, determine the transaction price, the 10 billion we were talking of. Step 4, allocate the transaction price to the 2 obligations. So allocate out of the 10 billion, what goes to construction and what goes to maintenance. I hope it is fairly straightforward. And then step 5, which is the final, recognize the revenue when the performance obligation is satisfied. Step 5, recognize revenue only when performance obligation is what? Satisfied. Remember, you only recognize it as your income when you comply. When you finish construction, you recognize it. If you have not finished, you only recognize a percentage. Actually, from around 7 p.m. up to 8 before we end the class, we'll be looking at this last step, but in complex examples, not straightforward examples. So allow me to move on. So the first question I want to cover is not in the notes, but I've attached it in the Excel sheet. The first example that I want us to look at is example on recognition, how to recognize revenue, on recognition of revenue. Please understand me. If you are somebody who has passed through the old standards, if you are somebody who has passed through IS 18, this example is from IS 18. And then after finishing these, we will now go to examples on IS 11, but they are now combined together. IS 11 plus IS 18 combined. Now we are just interested in knowing how much revenue should we recognize. What is step 1? Because I will not come back to this. Identify the contract. Step 2, identify the separate performance obligations. Step 3, determine the price. Step 4, allocate the transaction price to the performance obligation. Step 5, recognize revenue only when performance obligation is satisfied. So let us look at an example. Once we finish with this example, we will come back and continue with the standard. So let's go to an example. Take note of this. So this example is also not in. David, please. Please. We have just started the standard. You are asking us, we have not, wait, I conclude the standard. You see, there are many examples here. You see, there is an example here. For example, if I pick that example, let's not go ahead of the subject. You can see progress billings, contract price, value of work certified, all that will cover. You know, you are not born and you start working. Please, let's go procedurally. Okay, so let's read this question. On 1st December 20X1, Wade receives an order from a customer for a computer as well as, I'm repeating, on 1st December 20X1, Wade receives an order from a customer for a computer as well as 12 months of technical support. Wade delivers the computer and transfers its legal title to the customer on the same day, and transfers to the customer on the same day. The customer paid for $20 upfront. If sold individually, the selling price of the computer will be $300, and the selling price of technical support will be how much? $120. Required. Okay, so required. Apply the 5 stages. This is why I brought in the stages, because I saw this question from somewhere. So apply the 5 stages of revenue recognition per IFRS 15 to determine how much revenue Wade should recognize in the year ended. Which year? Year ended 31st December 20X1. So in our solution to this question, so in solution, you have been asked to apply the 5 stages. So what is step 1? Step 1 is to identify what? The contract. I hope you remember that. Identify the contract. So what is a contract? It is an agreement. So what you will say in this stage, you will say there is an agreement. There is an agreement between who? Between Wade and its customers and their customer for delivery or provision of goods and services. Okay, let me use the word provision. For provision of goods and services. So there is a contract because Wade is to deliver goods and service. So that is step 1. So remember step 1, I've explained through an example there. Step 2, and this is how you'll be answering the question if you have been asked to recognize revenue. To recognize, even if you've not been asked for the steps, you must show the steps. Step 2, identify the separate, how did we call it? Identify the separate performance obligations. Identify the separate performance obligations. Identify the separate performance obligations. So we can read so that we clearly identify them together. So on 1st December 20, Wade receives an order from the customer for a computer as well as 12 months technical support. So identify number 1 or number A. What is the first obligation? Is supply of a computer. Supply of a computer. Supply of a computer. B, what is the other obligation? Supply of technical support. The other obligation is supply of technical support. Remember, we said revenue is classified into three. What did we say? Rendering of services, offering of, what did we call it? Sale of goods. Number two, rendering of services. So A is the sale of goods. B is the rendering of services. Let's go to step 3. What was step 3? Step 3 was determine the transaction price. Determine the transaction what? Transaction price. Determine the transaction price. So what is the price? Price is how much? 420. The transaction price is 420. Transaction price is 420. Thank you. B is provisional. Okay, thank you. The person who has answered me there. Step 4. In our step 4, what did we say? Allocate the transaction price to the performance what? So allocate transaction price to what? Allocate transaction price to performance obligation, to performance obligation. So let's allocate. So A. So obligation 1 for supply of computers. Supply of computers, it is how much? It is equals to $300. I hope you can see the $300. B, those are the obligations. Supply of technical. I wanted to finish this before 7 so that we continue. So supply of technical support. Supply of technical support is equals to how many dollars? $120. Can you switch off everyone also videos someone? Okay. Okay. Thank you. Let me try to switch off these videos. I'm just trying to, thanks, Dennis. Okay. Okay, I think I've switched off everyone. You know, from my end, I've switched off the videos from my end, so I cannot see what is happening from your end. But whenever you see a problem, just raise it. Okay, so let's continue. So that is step 4. Please keenly follow these construction, not construction contracts. IFRS 15 is very important. So step 5. What was step 5? Step 5 was to recognize what? Revenue when the obligations are met. Recognize revenue when obligations are what? Satisfied or met. When the obligations are satisfied or met. Okay, please, let's continue with the class. Just ignore that. I hope I've switched her off. Okay, so let's continue. So here is where most of the marks now come. Now look at the question. Let's read it again. So in this case, we are being told the customer paid $420 upfront. If sold, okay, note that I didn't want that. I think it is in the first paragraph. On 1st December 20X1, Wade receives an order from a customer, not the date, from a customer for a computer as well as 12 months technical support. When did Wade receive the order of the computer? On 1st December. And the technical support is for 12 months. So please count 12 months from 1st December. 12 months will end in 30th November next year, 2002. I hope we are together. Now, in this case, remember you were not asked for 1 year. You are being asked here, look at this. Apply the 5 stages of revenue recognition per IFRS 5 to determine how much revenue Wade should recognize in the year ended. When is the year ended? The year ended 31st December 2001. 31st December. Remember, when did they get the contract? On 1st December, 1 month later. So revenue to be recognized by 31st December 20X1 is, please take note of these. Number A, the whole of $300. The whole of the $300, because the computer would have been, because the computer would have been what? Supplied. Would have been supplied by what? 31st December. I hope you get me. Because the computer would have been supplied by 31st December. So the whole of the revenue, the 300, that is why it's important to divide it into 2. Part B, for the technical support, recognize only 1/12. Somebody to help me. Why 1/12? The technical support was to be for 12 months, but it is only, so 1/12 of what? Of 120. Do you see the way this standard, the introduction part is simple? So for technical support, recognize only 1/12 of that, which is equals to 1 divided by 12 times what? 120. So it gives you what? 10. So what is the total revenue? Total revenue to be recognized is equals to 300 plus 10. So that gives you how much? 310. I believe everyone has understood what you have done there. I hope everyone has understood what we have done there. So let me remove that from there. I just put it here. So which is equals to 1 divided by 12 times what? 120, which is 10. Somebody's asking, explain why we are dividing by 12. Look at, when did we get into the contract? On 1st December 2001. I hope you are seeing that. Wade receives an order from the customer for a computer as well as 12 months technical support, as well as 12 months technical support. So by 31st December, we have only supported them technically for 1 month. There are still how many months remaining? There are still 11 months remaining. So don't recognize the 11 months that are remaining. Thank you, Davy, for also supporting my answer there. Thank you. So the first part, we have finished the first part, which I wanted to finish by 7. So for the remaining 1 hour, today I must say early, I may delay by around 15 minutes so that at least we finish the standard. So I've finished the first part of the standard IFRS 15. So let's go back to the slides. I hope everyone has understood this. So how to recognize what? Revenue. That is how we recognize revenue. So we want to go back now to where we had stopped. What recognition will be in February? You know, every month. So the remaining ones, please understand me. When you come to the next year will end 31st December 2002. In the next year, you will now recognize 120 minus 10. You will recognize 110 in the next year. In the second year, you will only recognize how much? 110 in the second year. Thank you. Okay, so let's continue. Let's go back now to the slides. I hope we are together there. So thanks for the person who raised this standard. I was almost forgetting about this standard. The person who raised it yesterday that we had not covered, thank you. I had forgotten actually about it, had you not mentioned it. So next, so we want to move now a step further. We have seen how to recognize revenue. So next, we want to look at recognition of contract revenues and costs. So that is our next. You have now known how to recognize revenue. Now next, we want to look at recognition of contract revenue and what? Costs. Recognition of contract revenues and costs. Again, these I want to cover for the next 20 minutes or so. Recognition of contract revenue and costs. Take note of this. And this is the most common question in exams, and also the last part that I will cover. So recognition of contract revenue, this is a note, revenue and costs depends on the outcome of the contract, depends on whether the outcome of the contract, the English there, let me edit the English there. Recognition of contract revenue and cost depends on whether the outcome of the contract, I think that English is right, on whether the outcome of the contract can be measured reliably or not. I'm repeating. How you recognize contract costs and revenues depends on, where is the main point? Whether the outcome can be measured reliably or not. So I'll start with number 1. When the outcome of the contract can be measured reliably. So this is the first point. If you are in a position to measure the outcome reliably, either profit or loss. So when we talk of outcome, if you are in a, you know, when you get into a contract, you should measure whether you are in a position to make a profit or loss. So if the outcome will be a profit, take note of that. If the outcome will be a profit, costs and revenues should be recognized depending on the stage of completion of the contract. Please take note of that. If you know that the outcome will be a profit, what should you recognize? You should recognize depending on the stage of completion of the contract. If the contract is 60% complete, recognize 60% of revenue and recognize 60% of costs. That is if you will get a profit. I hope we are together there. So if you will get a profit, recognize depending on the stage of completion of the contract. Now, this is related to the question the other person was asking me, but I will still look at one example before I come to that question. So we have said if the outcome will be a profit, what do? You recognize depending on the stage of completion. B, if the outcome will be a loss. Please, in this standard, this is the most important slide. If the outcome will be a loss, recognize the entire loss immediately. Recognize the entire. If it will be a loss, recognize the entire loss immediately. So the first thing you need to do, you need to find out, will the contract give me a profit or will it give me a loss? If it will give you a profit, you recognize depending on the stage of completion. If it will give you a loss, you recognize the whole loss in the current year. You recognize the whole loss, what? Immediately. Recognize the whole loss immediately. Let me reduce the size, so that everything fits. Okay, next, number 2. So that was number 1. Number 2, remember we said recognition depends on whether the outcome can be measured reliably or not. So number 2, where the outcome can not be measured reliably. Where the outcome cannot be measured reliably. Where you are not sure, in other words, not sure whether what? Whether a profit or a loss. Not sure whether a profit or a loss. So where you are not sure whether you will get a profit or loss, what should you recognize? Revenue should be recognized only to the extent of the costs that have been incurred. Revenue should be recognized only to the extent of the costs that have already been incurred. Let me use a simple language here. So when you want to recognize revenue and cost, it depends on whether you are sure of making a profit or not. If you are sure that you will make a profit, you recognize depending on the percentage of completion. If you are sure you will make a loss, the entire loss is recognized immediately. If you are not sure, so if you are not sure whether you will make a profit or a loss, if you are not sure whether you will make a profit or a loss, what do? The revenue to be recognized is to the extent of the costs that you have incurred. If so far you have incurred costs of 2 billion, the revenue that you will recognize is 2 billion. If you are not sure whether you will make a profit or you will make a loss. If you are not sure whether you will make a profit or you will make a loss. So again, here, let us look at an example. So I always just like moving step by step. An example to explain this. My 20 minutes are almost, I said by 7:20 we should finish this. So I'm remaining with 9 minutes to cover this example. So let's go to an example. Okay. Read through this example. Let's read through it together. This example is in your notes. Okay. By the time we finish the third example, we'll be in a position to attempt the past paper question. Before we finish the 3 examples, we cannot attempt any past paper question. So let's read through example 1. The following information, so we can read through example 1 now. The following information relates to construction contract. Estimated contract revenue is 800,000. Cost to date, oh, there is something I did not explain. Okay, let me just explain it as I do an example. The following information relates to a construction contract. Estimated contract revenue is that. Cost to date has also been given. Estimated cost to completion. So what you have incurred so far is 320. What you are remaining with to incur is that. Estimated stage of completion is what? 60%. As we'll be continuing with the equation, this percentage will also not be given. There will be 2 methods we'll learn. Actually, there are 3 methods, but we'll only learn 3 methods of how to calculate the 60%. I'm gradually moving there. What amount of revenue, costs, and profits should be recognized in the income statement? What amount should be recognized in the income statement? So remember, the amount to be recognized, so maybe in my solution, I'm just trying to be slow. The amount to be, solution for example 1, the amount to be recognized, what did we say? Depends on whether the outcome can be measured reliably or not. It depends on whether the outcome can be measured reliably or not. So the amount to be recognized depends on whether the outcome can be measured reliably or not. In this case, we can measure the outcome reliably as follows. You can measure the outcome reliably as follows. So let's look at this. What is the contract revenue? Contract revenue. What is our contract revenue? Everyone can see there. The contract revenue is 800,000. I hope everyone sees that. The contract revenue is 800,000. So the contract revenue is 800,000. Everyone can see that. So costs. So contract revenue less what? To know whether you have made a profit or not. So you less your costs. So there is cost to date. Cost to date. So what is your cost to date? Your cost to date is 320,000. I hope everyone can see that. Cost to date is 3,000. So cost to completion is, so what is our cost to completion? Our cost to completion is 280,000. I hope everyone is seeing 280,000. 280,000. So what is the total cost? So the total cost will be, so I can push this inward. So what is the total cost? Total cost will be equals to 320 plus 280. So my question is, are we making a profit or a loss? Somebody to answer me. Are we making a profit or a loss? Are we making a profit or a loss? Thank you. We are making a profit. So remember, the outcome can be measured. So we are making a profit. So if we are making a profit, which you can all see, what is a profit? 800 minus 600. So we all agree it's a profit. So we said, if profit, revenue, and what? Costs, if costs should be recognized depending on the stage of completion. You see, this standard is understandable. Depending on the stage of completion. Why? Because it's a profit. If it was a loss, we could have recognized the entire loss immediately. So how will we recognize? So look at what I'm doing. For revenue, it will be equals to 800,000. I hope everyone is seeing that, times 60%. You get your answer. For costs, it will be equals to, what will it be? 600,000. I hope that is 600,000 times 600,000 times what? 60%. You also get your answer. And then, of course, profit, you can also directly get, or you can just get the answer. Profit is equals to, again, 200,000 times what? 60%. The main problem in exams is how to get the 60%. We will do it in another question. So what amount will be recognized? So what will be the amount to be recognized? So it will be 800,000 times what? 60%. It gives you 480. What amount of costs will be recognized? 600,000 times 60%. You get 360,000. What profit will be recognized in the year? 200,000 times what? 60%. So which method is that? If the outcome can be measured reliably and you know it is a profit. So that is if the outcome can be measured reliably. So this is what will go to your revenue. This is what will go to your cost of sales. And this is what will go to your gross profit. I hope you've understood that. Now, suppose it was a loss. I don't want to cover that. If, for example, instead of 600,000 here, it was 900,000. So if it was 900,000, if, for example, the loss was, if it was a loss and the loss is maybe, so maybe let me add that. If it was a loss and maybe the loss is 100,000. This is just an example that was not there. What did we say? If it was a loss and it is 100,000, the loss of 100,000 will be recognized what? Immediately. Immediately. In the current year, in the current period. So if it was a loss, this is what you do in the current what? Year. This is just an example which was not there actually. So don't mix that it was in a question. So what about if it is, we are not sure of the outcome? Now example 2. Example 2, solution, is now where we are not sure. This is example 1. This is examples. This is example 1, solution. So I'm just going step by step. What is example 2 solution? Read through this example 2. Take the same contract example 1 above, but now assume that the business is not able to reliably estimate. So the business is not able to reliably estimate whether a profit or a loss. The business is not able to reliably estimate whether it will be a profit or loss. What did we say? The rule was the business is not in a position to estimate whether it's a profit or a loss. Sir, do you mean that if it is a loss, we don't proportion it in the remaining months? No, we don't. You recognize the whole loss immediately. Moses, I hope you are together. If it is a loss, don't proportion it. You recognize the whole loss immediately. Are we together, Moses? So you recognize the whole loss, you don't proportion. You only proportion if it is a profit. Sir, there is where they mention that the cost already incurred is 320. I thought it is the one we Mbabazi, I don't really get you very well. Let me read your statement again. Sir, there is where they mention that the cost already incurred is, I thought it's the one we recognize. No, it is not the one to recognize. This 320, remember we recognize the whole loss what? Immediately. The whole loss. It is not the one we recognize. I will come to it. Just wait. There is an exam question we will be looking at. So that is why I'm saying today I may extend by 15 minutes. Just allow me to move on. You will slowly understand it as we continue. So the business is not able. So if the business is not able, what did we say? You recognize, Bambazi. Now please take note of what I'm doing here. Recognize revenue only to the proportion of cost incurred to date. So Mbabazi, this is what you are talking about. You only do that if you are not sure of the outcome. If you've understood, so in this case, if you are not sure of the outcome, whether it will be a profit, what is the revenue that only, what revenue do you recognize? Recognize revenue only to the proportion of the cost incurred to date. Even though you know the cost is 800,000, but you are not sure of outcome. The cost incurred to date is 320. So you only, those are rules of IFRS, and that is why we cover this standard. Those are rules of IFRS what? 15. So what is the revenue to be recognized? 300,000. The cost incurred what? To date. So what is the cost to be recognized? The cost to be recognized is also 320,000. So what is our profit to date? Your profit to date will be 0. So will be that minus that. So your profit to date will be, Mbambazi, have you understood? If you have understood, you can type yes so that we move on. So what you are asking applies to example 2. Okay, let's continue. Those who have covered this standard before, I hope you understand. I'm trying to explain it in a language that everyone can understand. I'm just trying to be as slow as possible. So that is what have we learned. What we have learned in this case, before I go back to the slides, we have learned that recognition of revenue and costs depends on whether the outcome can be measured reliably or the outcome cannot be measured reliably. If the outcome can be measured reliably and you know it is a profit, what do you recognize? According to the percentage of completion. If you know it is a loss, the entire loss will be recognized immediately. If you are not sure whether the outcome will be a profit or a loss, what do? The revenue to be recognized is equivalent to the costs that have been incurred. Okay. Okay, Silas, what do you want me to explain? Example 2. Now in example 2, it is still example 1, but what are we being told? Take the same contract, this contract 1, but now assume that the business is not here. The business is not able to reliably estimate the outcome. If the business is not in a position to reliably estimate the outcome, what do you recognize? The amount of revenue to be recognized is equal to the cost that you have so far incurred, because you don't know how much cost you will incur in future. So what you recognize must be equal to the cost that you have so far incurred. Where did you get the 320 revenue? Okay. Thank you. For example, okay, I think I've explained your questions. Allow me to continue. Immediately, no. I mean, Lauren, it should be recognized in the current year, even if the contract is for 3 years. Lauren, are we together? Immediately means it should be recognized in the current period. Okay, let's continue. It should be recognized in the current period. Can you allow me to complete the standard now? So let's go to the last part. Now, before I maybe go to the last part, you remember, you note that in the question we have so far covered, you are given the 60%. You are given the percentage of completion. You are given the percentage of completion. The examiner, in most cases, if he wants it to be maybe a 10 marks question, he will not give you the percentage of completion. So that is the next part I want us to cover. And then that person who had asked a question when we started the class, now I think your question will be answered as we continue. So the last subtopic in this, I want us to cover determining the stage of completion of a contract. Determining the stage of completion of a contract. Please, this is also very important, because the 60%, the examiner sometimes does not give you the 60%. So how do we get the 60%? No. That one, Jean-Paul, you'll be creating your own standard. Follow what the standard directs you. So that one, you'll be creating your own standard. Follow IFRS 15. In that case, you will not be following IFRS 15. Okay, let's complete. IFRS 15, so we can say IFRS 15 gives two major, I know there are 3 methods, but it gives 2 major methods of calculating the percentage of the percentage into bracket what? Stage of completion. So IFRS, it gives you 2 major methods, and always look for these methods in exams. What if, okay, I think I've answered Jean-Paul. So it gives you 2 major methods to be used, 2 major methods. And what are the methods? Method one is called proportion of contract costs. Proportion of what? Contract costs. So method 1 is called proportion of contract costs. So here, percentage of completion will be equals to cost incurred to date. Cost incurred to date. You remember the 320 in the question we did? Cost incurred to date, of course, times 100. You know, we want to get a percentage over total contract cost. Over total contract cost. This is method 1. So if the examiner asks you to use method 1, what is method 1? Method 1 is called, so method 1 is called proportion of contract cost. This is what you will do to get the answer. Proportion of contract cost. That is what you will do. That is method 1. Method 2. So it depends on what the examiner asks. Method 2. So in method 2, it is called work certified to date. Okay, what method 2, work certified. How do you write certified to date? Work, method 1, proportion of contract cost method. Method 2 is called work certified to date. So in this method, percentage of completion will be equals to work certified. In other words, the government will be certifying, or the person who gave you the job will be certifying the percentage that you have completed. So you will be looking at work certified. In other words, work completed, work certified to date times 100 divided by contract price. Contract price. Remember, contract price is the revenue. So don't confuse, is the revenue. Contract price is the revenue. So divide by contract price. So take note of that. Contract price is the revenue. So if you use the work certified to date method, you will take work certified I hope that is very clear. I think I'm clear. So if you use proportion of contract cost method, you will take costs incurred to date times 100 divided by total contract cost. If you use percentage of completion method, it will be work certified to date divided by the contract price. So in the remaining minutes, I want us to look at 2 examples. Now in these, I'll now clearly show you what goes to the balance sheet, what goes to the income statement, and then we end the class. In example 1, what was the contract price revenue? The contract price was how much? 800,000. Contract cost is different from contract price, yes. Contract cost is the cost incurred. Contract price is the revenue. LT, are we together? Okay. LT. Devi, I've seen you've understood. LT? Okay, let's continue. So don't confuse the two. So let's go to an example. So example. Now with this example, I assure you once we've completed this example, you can answer any past paper question on this. So allow me to go to the example. The example is also in your notes. After this example, there is no question that will be a problem in IFRS 15. So take your time to read that question. Read it and read it carefully. Read it at least. After this, you can attempt any past paper question, and I've chosen one. Actually, there are 2. I'll even give you others that you can attempt in your free time. Take your time, take your time. So the question reads, the main business of S. Okay, as you read, I can, sorry for that. Okay, the question reads, the main business of S Limited is construction contracts. So the main business is construction contracts. At the end of September, take note of the period. Take note of the period. At the end of September 2003, there is an uncompleted contract on the books, details of which are as follows. So there is uncompleted contract on the books, details of which are as follows. So you have been given the contract price. Sorry, contract B. Date commenced. When did the job start? The job started on 1st, is it 1st April? Yes, 1st April 2001. Expected date of completion is 23rd December 2003. So of course there is IFRS 15 because you can see it's more than 1 year automatically. Final contract price. The people who are asking me, this is what we call contract revenue. This is the revenue. So cost to 30th September 2003 is 210,000. Next, value of work certified to date. So the work certified to date is 230,000. Progress billings. Remember, as you do the job, you'll be invoicing the government. That the government will really be unfair if they pay you at the end of the contract. So as you continue with the job, you'll be billing the government. So by 30th September 2003, you had billed the customer how much? You had billed the client 210,000. Cash received is, now look at this. There is a very straight answer here. There is, you billed the government 210, but how much did the government give you? 194. So do you see there is something there that everyone who is good in financial reporting can see there is a receivable? What is the receivable? Receivable is what the government has not yet paid you out of your total billing. What did the government not pay you? You billed the government how much? 210. You received how much? 194. So there is a receivable, which is a current asset of 16,000. You can even see before we start calculation. So there is a receivable of 16,000. There is a receivable of 16,000. Let's continue. So when I ask you what is the current asset, remember that receivable. Cash, okay, estimated cost to completion, it is 2,600. So look at the question. Prepare calculations showing the amount to be included in the income statement and statement of financial position as at what date? 30th September 2000. So to date, the day today is 30th September 2003. In order to answer that question, number one, in our solution, the first step is to get percentage of what? Completion. Percentage of completion. Now, in this, if here you can use any, but you have been told, if you have been given value of work certified, please understand me. If you have been given work certified today, it is best to use work certified to date. So if the examiner has given you work certified to date and he has not specified which method to use, remember to use work certified to date. So look at this. I'll use work certified to date method. However, if the examiner has not specified and you also used the other method, there is no problem. So here it will be percentage of completion is equals to what is it equals to? Is equals to percentage of completion is equals to work certified to date. When we use work certified to date, we said you'll divide by what? Contract price. If you use percentage of costs incurred to date, you will divide by what? Total contract costs. Okay, thank you for the person who has calculated it. So in this case, what is the work certified to date? Work certified to date is, where is it? 230,000. I hope you can all see that. So it will be 230,000 divided by what? Divided by contract price. Contract price, anybody who can see contract price? Date expected. Yeah, contract price is 290,000. Of course, times what? Times 100. So Moses tells us it's equals to, so the answer is 230 divided by that. So times, of course, times 100. So it is 79. And even we can put it to 2 decimal places or 1 decimal places. Just be consistent. So up to there, I hope we are together. So that is percentage. Now with that, you can now go and attempt the question. So what goes to the income statement? So please understand me. Extract of income statement. What goes to the income statement? So you all know you will start with what? Revenue. What will go to the revenue? Revenue will equal to be 290,000 times what? 79.3%. You get your answer. Next, you less what? Costs. So there is costs to date. What is cost incurred to date? Will be equals to cost to date is 210,400. So it will be 210,400 times 79.3%. You get your answer. Okay. Cost to completion. Cost to completion. So what is our cost to completion? Cost where I saw cost to completion. I saw it somewhere. Yeah. Estimated cost to completion is 2,600. So 2,600 times 79.3%. So what do you get in that case? You can get me the answers. So the first one is 290,000. 290 times what? Times 79. So what do you get? 230,000. Next. So next, this one is 210,400 times, again, 79. It gives you 166. The next one is 2,600 times 79. What does it give you? That. So what is the total cost? Total cost will be equals to 166. I'm just writing that. I know I can add, but I'm just showing so that when you can quickly identify it when you are revising. 338. So what will it be? It will be equals to this plus that. So what will be our profit? Our profit will be equals to 230 minus 183. So that is what goes to the income statement. I hope so far, so good. The person who was asking the question, so far, so good. So this is how did you know the contract is profitable? How did you know the contract is, can I avoid that question? Okay. How do you know the contract is profitable? You take the price, and I think it's not the first time I'm doing that. And then you take cost to date, and then you take cost to completion. The person who has asked me, what is the contract price? Contract price is 290. I believe it's that. Cost to date Okay, let me put it. These are I'm just doing for the sake of the person who has asked the question. How do you know? But we have done these. You should not have asked, but let me just do it. How do cost to date is 210. 400. Cost to completion is 600. Now, what is the total cost? It is this plus that. Is it profitable? Of course, it is profitable. So minus that. So do you see it's a profit? It's a profit. So you can measure it reliably. So it is a profit. Have I answered you, the person who has asked that question? Why do we adjust? Ain't we wrong on the cost to date? Why do we adjust yet we were given? What are we adjusting? We are not adjusting anything. Remember, we are not adjusting. The person who is asking that, you have really not understood the principle. You have not understood the principle of IFRS 15. The principle is this. When you have a contract for 3 years, and maybe the contract price is 10 billion, you may have incurred to date 8 billion, but the contract was for 3 years. You need to spread the cost you incurred over 3 years. You need not to show what you incurred to date. What you recognize is proportion of the 3 years, proportion of the 3 years, or percentage of the job that is completed. So the percentage is what gives you what to recognize. The cost to date only helps you to know whether it's a profit or it's a loss. So that was extract of income statement. Let us go to extract of, okay, let us go to, I hope you've understood. So let's continue. So let's go to, I hope everyone has understood that. That is what? Extract of income. So when you are preparing your income statement, your revenue, remember to include that. Your cost of sales, remember to include that. Your gross profit, remember to include that, because this may be part of another question. So let's go to extract. Extract of what? Statement of financial position. Extract of statement of financial position. Now, before I'll do some workings, if the questions are more, cost to date is not 210. Cost that, don't confuse that. That is what you build. You build the customer. That is not cost to date. Cost to date is this 210 400. So don't confuse that, please. Don't confuse that, please. So what I had failed to explain in the slide is what now I want to put in the working here. So look at what I'm doing here. If you want to know amount due from the customer or from the customer, the first working is amount you expect from the customer or the amount that you owe. Why profit are not equal by using the two methods? You know, there are different methods. So that is why I've said if the examiner has not specified, you use work certified. You use work certified because the two methods can give you different answers. So that is why it is like you are asking me, Theogene, it's like asking me, why is it that straight line method of depreciation does not give you the same answer as reducing balance? Diogene, am I in a position to answer that question? No, it is a method. Straight line will not give you the same answer as reducing balance. Same to IFRS 15. In IFRS 15, the two methods can give you the same answer or cannot give you the same answer. I hope I've answered you, Diogene. Yes, thank you. And it is good yesterday we covered what are accounting policies. Did we cover yesterday accounting policies? We defined accounting policies as principles, conventions, rules, and practices that are followed. Thank you. You have told him that is a convention. The same accounting policy. So each organization will choose which method to. Thank you, class rep. Also, I've seen whatever you have said there. So amount due from customers is the first calculation. So amount, if it is amount, so take note of this. Amount due from customers will be an asset. Amount due from customers will be an asset. So it will be a non-current asset or even current asset. Amount due from customers will be non-current assets. Number two, amount there is a mistake here. I always don't like confusing. So what have I said? Amount due from the customer or, there I repeated myself, or to the customer. Remember, the customer can pay you excess. So if it is amount due to the, if it is excess, if it is amount due to the customer, it becomes what? Liability. It becomes a liability. Okay. It will become a liability. So your key point, and then also remember to calculate receivables, if any. How do you calculate receivables? Receivables is if progress billing is more than what? Cash received. If progress billing is more than cash. So please remember, these three items are what goes to the balance sheet. Those three items are what we take to the balance sheet. Now, is it a current asset or a non-current asset? Let me clarify there. Or current asset. Many people treat it as a current asset, but sometimes it can also be a non-current asset if it is the amount for the next 1 year. Or let's just assume, okay, ideally put it at your level. Just put it as a current asset at your level. Put it as a current asset, because we are assuming the government will not default in payment. The government will pay you within the next 12 months. But if you are sure you will not be paid within the next 12 months, it becomes a non-current asset. I hope we are together. Where I put the government, put the customer. So let's start with amount due to. So calculation of amount due So this is calculation number 2. Don't confuse it. So that will be number 2. So let's start with number 1 so that I'm clear. Number 1, amount due from or to the customer. Please, let's minimize questions. I will now look at the questions when I'm finishing. How do you calculate amount due from or to the customer? You will get this in the notes. I forgot to put for you in the slides. So it will be cost to date, cost that you have incurred to date. You add attribute profits. Let me call it attributable profits. If it's a profit, you add profits. If it is a loss, you less. You less what? Attributable losses. If there is a loss, attributable losses. Okay, so that is what you do. So what we are saying, you take, if it's a profit, you add. If it is a loss, you less. Cost incurred to date plus profit. Now, what, and then you less what you have already billed. You less progress billing. This one I ought to have put for you, sorry, in the slides. You less progress billing, what you have already billed the customer. So the answer you get here becomes either amount due from customer, due from, or what? To. So to if it is negative, from if it is positive. So amount due from or to customers. I hope we are together. Due from or, so that is the format you need to follow. So it is from if it is positive. If it is negative, it is. So if positive, it is an asset. If, what next? If negative, it is a liability. It is a liability. And then that was number one. Number two, what have we said? Receivables will be equals to progress billings minus what? Cash received. You get your answer. Progress billings minus cash received. So this is just a format I've given you people. This is just a format. And this is also a format for that. So why don't we start with the first one? So let's start with the first one. I hope you understand me. What is the cost to date? Cost to date. Can somebody help me the cost to date? Cost to date is 210,400. I hope we are all seeing 210,400. So cost to date is 210,400. I hope everyone is seeing that. Next, was it a profit or a loss? Was it a profit or a loss? It was a profit, attributable profit. So next, it is a profit. So add what? Attributable profit. Attributable profit from the income statement calculation. Profit from the income statement. So what is the attributable profit? I just bring this 46 down there. So next, progress billings, less progress billings. Less progress billings. What is our progress billings? Progress billings is 210,000. I hope everyone can see 210,000. What the other person was calling cost to completion, 210,000. 210,000. So is it an amount? Somebody to help me. Is it an amount due to or from? We will test. If it is positive, so let's test. If it is positive, let's test before I say that. 210 plus 46 minus 210, that gives you 47. What is it? Is it an asset or a liability? It is due from. This is due from. This is due amount what? Due from. Because it is what? Positive. I hope we are together. Because it is, therefore it is an asset. So this one will be what? asset in statement of financial position. It will be a current asset in the statement of, so amount due from, let me write it in full, from customers. So the amount due from what? Customers. Amount due from customers. Amount due from customers. Next, so that is an asset. Again, let's check whether there is receivables. Next, receivables. We compare what? Progress billings. What did we say? Less what? Cash received. What is our progress billings? Our progress billings is 210. Our cash received is 194. 210, 194. So where is it? 210. Progress billings is 210,000. And this other one is 194. In most exams questions, they are the same. If they are the same, there is no receivables. But here there is receivables. Minus 194. So this is what? Receivables. So this one also is an asset that goes to asset in statement of financial position. So in statement of financial position, there is this first one and there is the second one as a result of IFRS what? As a result. Thank you, thank you, thank you. Please, you know, without covering that standard, I'm very sure everybody could have skipped that question in case it came. But now I hope you are in a position to comfortably answer the question in case it comes. So in case it comes, there is no excuse. You should be in a position to do that additional information. Now I have two questions. Just allow me to read the question. You see if it is doable or not. Now, Techno Common 11. That is, you know, you are asking a question. Let me go back. You see, sometimes you can bill the government, but that the amount you have billed is not receivable. You can bill, maybe the rule of your contract was 20% after 6 months, 20% of the invoice price after 6 months. That does not mean it is receivable. After 1 year, it will not be that the 20% that the government said or the customer said, that is progress billings. So when you get, there is a difference between receivables. Receivables is what is due to you as a result of the difference between what you billed the government and what you received. You know, sometimes you invoice 1 million, but you are paid only 800,000. That is a receivable because you are supposed to receive it. You have not yet received it. Now, when we talk of amount due, it is as a result of the contract. Maybe the amount due, the contract was saying 20%. So 20%, you just need to look at the price minus what? The price. I don't mean the price. I mean the cost to date. Sorry for that. I mean the cost to date. You less what? The cost to date, you less any progress, you add any profits, you less any progress billings. Now. I'm remaining with 10 minutes. I said I will extend with only 15 minutes. Now, can we read this question? This is December. Note the question somewhere. Just note, we see if it is doable or not. How many marks? 10 marks. So whatever we've done is worth around 10 to 15 marks. So how many marks is that? 10. So just note the question down. December 2014, question 5C. I also noted another question somewhere. I hope I'll get it. Before I read the question, let me just give you, I noted the questions somewhere, the questions in that topic. Yeah, there is another question, November 2017. Write the question somewhere. November 2017, question 1B. November 2017, question 1B. November 2017, question 1B. Let us read this question. You see if it is doable or not. So read what the question is asking you. So this is December 2014, question 5C. December 2014, question 5C. So let's read what the question is asking you. Calculate the amount which should appear in the statement of profit or loss and the statement of financial position of TV company on which date? 31st March 2014. 31st March 2014. So don't you realize what do you mean you need Excel of tomorrow and today? Tomorrow we are not meeting. I hope you meant yesterday. Okay. Oh, sorry, I had forgotten to share. I will share. So I think you meant yesterday, not tomorrow. Okay. So let's read this question, please. We are finishing. So the question is the same as the question we have done. Look at the question we have done. The question we have done, we have shown what goes to the income statement. And we have also shown what goes to the balance sheet. So that is what we identify, and I think we just end the class. So TV is a construction company that prepares its financial statements to 31st March each year. During the year ended 31st March 2014, the company commenced 2 construction contracts that are expected to take more than 1 year to complete. The position of each contract at 31st March 2014 is as follows. Let me skip what is in the table. I go what is down there. The agreed work, value of work completed. The agreed value of work completed as at 31st March 2014 is considered to be equal to the revenue earned in the year is equivalent to the revenue earned in the year to 31st March 2014. The percentage of completion is calculated as agreed. Percentage of completion is calculated as agreed as value of work completed to the what? Contract price. Which method? Method 2. Maybe I ask a question because I'm seeing my time is not good. Are we in a position to do it? That is my first question. For both the 2 contracts. Are we, look at agreed contract price. Agreed contract price for contract 1, that is revenue. Estimated total cost at commencement. That is the estimated costs when you start. Estimated total cost to date. To date is that 4,000. Agreed value of work completed is 3,300. Progress billing invoiced and received. There is no receivables here because the amount that was the progress billing is the same as what is received. So receivables is 0. So please attempt this question. Now, the first thing you will do, I'm not doing it. The first thing you will do is what? Your working one will be percentage of completion. Percentage of what? Completion. And then once you have got percentage of completion, you will get what goes to the income statement. Extract of income statement. So you will do for me that. So in extract of income statement, you will show me what goes to revenue. So don't forget that. Revenue, cost to date, cost to date. Next, cost to completion. I hope we are together. And then total cost, when you add the 2, total cost, and then it gives you what? Profit. That will give you extract of income statement. Please do for me. It is very direct once you get percentage of completion. And then you go to extract of statement of financial position. Under extract, so you get amount due from or to the customer. You know how to get it. How do you get it? It is cost to date. If it is a profit, you add the profit. Add attributable profit. I'm just giving you the format so that you don't say it's not doable. And then if it is a loss, you less loss. And then you less what? You less progress billings. The answer you get is either amount. I don't want to write it because I don't know if it is due to or from. Now, there is no receivables. Maybe that is my last question. Why is there no receivables? Take note of this. Why is there no receivables? Somebody to answer me and then we stop the class. There is no receivables in this question. Why? Can somebody give me the answer why there is no receivables? Yes, for each contract. So you will do for contract 1 and contract 2 separately. I'm asking a question. Why is it there is no receivables? Because what was billed is what was received. You know, I've covered all the major standards I've completed. What is remaining are the minor standards that cannot cause a difference in exams. So, Kigali, please understand me. Kigali, can we meet Tuesday next week? Are you okay with Tuesday next week again? So that we find what to cover. Tuesday and Wednesday next week. Do we agree on that? So Tuesday and Wednesday next week, we can never miss what to cover. We will find what to cover. Now, Msanze students, please, before you log out, listen to me and listen to me clearly. Msanze students, we have a class this weekend. Kigali students, we have a class Tuesday next week. Tuesday next week is for all, both Kigali and Msanze. Now, next weekend will be the start of physical classes. And next weekend, that is 2nd, 3rd, and 4th April, we will start by doing mock. There will be mock exams that will be done. All mock exams will be next week. All mock exams will be next week, Friday, Saturday, and Sunday. I will share the timetable by Friday this week. So not next week, Friday, Saturday, and Sunday, depending on the timetable. Next week, weekend, there is no class. Whichever program you are doing, there is no class. It is a mock week. And then after that, we will again meet in our classes. I hope you've understood me. The mock will be done in University of Kigali. If you are in Kigali, you attend it in University of Kigali, Kigali campus. If you are in Msanze or areas in the north and west, you attend it in Msanze. I hope we are together. That is on the 3rd, 4th, and 5th. There is mock. There will be no classes in that week. It will just be exams to test your understanding. And then after that, we will meet physically. Let me give you a disclaimer. No coming for the mock if you are a private student and you have not paid fees. I hope I'm clear. No coming for revision if you are a private student and you have not paid fees. I think we have given you a free service over the whole online period. So please make sure you pay your fees before you come to class. There are some who did not pay, just managed to attend the classes without paying. So please make sure you pay before you attend the classes. Have a good night. See you on Saturday for Msanze and on Tuesday for all of you. Have a good night. I'm just sharing the slides right now. I'm sharing. Somebody's asking me what is the cost of completion of this question. That is why I wanted you to do it. You can see the last row. I hope you can see the person who has asked the question. You can see the last row. Can you see the last row? I hope you can see that is the cost to date. The last row, cost to date. Yes, this Saturday is an online class.